Hello traders, Gary Wagner here. It is 11:50 in Honolulu, 5:50 in New York on Friday. Happy Aloha Friday, as we say on the islands. Last trading day of the month, April 29th, 2022, and this is the daily report for gold and silver, our weekend review. Gold pricing over the last 2 days can be characterized by extreme volatility, with a low yesterday coming in at approximately $1,871 and the high today of $1,921.30. Gold futures basis, the most active June contract, closed up $5.60. It's a net gain of 0.3% at $1,896.90. We did send out a trade alert and entered long positions in gold futures, Forex, as well as GLD. We will cover those trades in detail when we pull up some charts. The dollar declined after trading higher for the last 6 consecutive days, giving up about 0.4% at 103.25. If you recall from shows this week, especially yesterday, we talked about the importance of that current level, the high that we saw yesterday at 103.73, because that's a high we haven't seen since, I believe, February of 2020. The first market I do want to cover quickly is GLD, the Spyder Gold Trust. We entered a long position. We bought shares of GLD at 175.70 per share. We put our stop initially yesterday at 173.50. Today, we sent out an email just before New York open to raise the stop in GLD to 176.30. That is below today's low. And our recommendation is to maintain your long GLD position and stop. Yesterday, we sent out a trade alert just prior to the open of trading in New York to take a long position in June gold futures as well as Forex gold. Gold was trading at $1,883. That is our entry price. Our initial stop was placed at $1,869. This morning, we sent out a trade alert to raise that stop to $1,888. We're looking at a daily chart, but the daily chart on Fridays is a little bit misleading. The reason I say that is you can see that it is looking at a current price of $1,911.70. The high is correct at $1,921. However, after the market closed in New York, it continues to trade in Globex. It is closed now, but currently fixed at $1,896.90. We are looking at an hourly chart so we can kind of lay out what has occurred over the last couple of days and when we actually entered our trade. Originally, we saw the market moving down. We had been trying to initiate a long position over a few days, but didn't feel comfortable thinking that it would probably trade to a lower low. In fact, it did do that. However, yesterday we saw this extreme low come in at 1871. This again is an hourly chart. We had that V bottom, and also on our daily chart, we had a single candlestick type that is a hammer. And that is what prompted us to initiate a position. We took the position on at 1883. That is right here. And as you can see, it occurred after the V formation. So this is about the time we sent it out, because after that it began to move higher. So we were able to get an excellent entry price. Initially, we placed our stop at 1869. We put it below yesterday's low. However, as you can see, today we raised it up to 1888, and that locks us in profit. The difference between 88 and 83, of course, is $5. Yesterday's trade alert also placed a buy signal in Forex gold. We entered that at $1,882.50. We placed an initial stop at 1868.50. However, today we raised our Forex stop to 1877. Maintain your current long positions as well as your stops. To our listeners that are not daily subscribers, after the credits, we will add additional content that will be taken as an excerpt from yesterday's show. It acts as more of a tutorial and will explain in more detail the rationale and thinking process behind placing our trade yesterday. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye. Recently, as I reviewed various trade alerts on our daily shows, I would hone in on a lot of the Western technical indicators, such as Fibonacci retracement, different support and resistance levels. Today, I want to talk about a particular single candlestick type simply from a group called the umbrella line. Now, the umbrella lines are 4 distinctly different candlesticks that have long lower wicks or long upper wicks, and then a small body that occurs either at the top of the price range or the bottom of the price range. This candlestick type is identified as a hammer. If this exact same candlestick occurs at the top, it's called a hangman. And the thing about this single candlestick type is alone, it doesn't really predict a key reversal. It's an indication that one might occur. However, a candlestick type or pattern must occur with certain other criteria, other studies that give it confluence or that add strength to the probability that the pattern is indicating either a key bullish or bearish reversal before we're comfortable acting on that information and issuing a trade alert like the trade alert that we sent out this morning. If you recall from Tuesday's show, and that was this small candlestick here that we identified as a 2-day pattern called a bullish harami. We talked about the fact that to actually take that call, we needed to see a confirming candle, which would mean that on the following day, we would have a large green candle with a higher high and a higher low than this small green candle. Obviously, that did not occur yesterday, which is why we did not take the call. And one of the reasons we believed that we could see, in fact, one more day of lower pricing as new lows were reached. That's exactly what we saw today. And what that means is that after gold traded below the 100-day moving average, traders perceive this as an extremely oversold scenario. We saw initiations of long positions as well as short covering, meaning they would enter a long trade and pull profits on earlier entries of a short position. Nonetheless, the real body remained above what we consider to be key support at 1885. The exaggerated tail tells us that buying absolutely came in, and so it made a lot of sense for us to enter the trade at $1,883 as seen on this 1-hour chart.